and today's topic. First, we'll like to cover institutional adoption. So, how has the perception and adoption of crypto assets changed among institutional investors in recent years, and what's driving this shift?
Yeah, thanks. Hey, it's Pratik from Apollo Crypto. We run 3 crypto funds across different strategies: delta neutral, long only, and some other strategies. After 2024 and the launch of the ETFs, I think institutional adoptions has gone up and to the right, and I think it's just the beginning. There's one thing about launching ETFs, but after that we've seen a deep options market and other derivatives market come online as well. And a lot of institutions that were originally not able to invest in this asset class can now not only invest via ETFs, but they're also doing all types of different strategies, such as the CME basis trade and taking long and short sort of views via options. We're also seeing a lot of corporates, such as MicroStrategy, buying billions of dollars, and they're not alone. We are seeing corporates buying Bitcoin as part of their treasury strategy. There's Metaplanet in Japan. There's a firm out of Hong Kong. There's several of them in the US. So we're seeing a lot of that, this diversification of the treasury happening as well, with Bitcoin as a core part of the asset base in the treasury, aside from just treasury bills and bonds haven't done that well, or gold or just currency. I think Bitcoin's actually also forming a place in that, and pension funds are also looking at it that way now.
So we've talked about corporate adoption, such as Tesla and a MicroStrategy, now called Strategy, who've put crypto on their balance sheet. Now, what about the regulatory side of things? So obviously when institutions are looking at crypto adoption, there's lots to consider in terms of the reg side. So how is the regulatory landscape evolving for crypto, especially in relation to family office, high net worth, and corporate adoption? And what impact will this have on our industry? Are we moving towards a more standardized and accepted framework? What do you think, Pratik?
Yeah, I think it couldn't be more bullish in terms of regulatory, on the regulatory front. We had a very hostile SEC in the US. They were basically harassing crypto founders, businesses. They were debanking them. It was pretty severe, pretty bad. Nobody could build anything in the US. Now with Trump and his executive orders and the AI and crypto czar David Sachs, they have a timeline to produce a favorable, somewhat, of crypto framework in the US. We should be hearing something in 180 days to 360 days. And optimistic that we will get some pretty clear direction from the US, and the rest of the world will follow. The G7, G20 countries should follow what the US does. So it's never been better on the regulatory front since the inception, since Bitcoin started.
I agree. These are exciting times in terms of the reg side of things, especially with a major country like the US looking at putting Bitcoin in treasury. So that's a pretty good segue into investment strategies and performance. What do the investment strategies look like for crypto, and what are the key factors driving successful crypto investments? Are there specific sectors or types of digital assets that are particularly attractive right now? Pratik, I might get you to start with this, given that Apollo Crypto is one of the best performing funds.
Yeah, thanks, Elise. Crypto investing is more of an art at this point in time. In traditional finance, all of you are used to cash flows, and you could do your GCF analysis, you could do PE, PF ratios, you can do all of those things. In crypto, you can't do that. In crypto, by nature, it is a decentralized blockchain system which is powered by its own currency. So you could imagine it like if you're operating in Australia, you need the Aussie dollar. If you're operating in the US, you need the US dollar. Britain, you need the British pound. And you need to operate on a blockchain using its own currency. However, these currencies are not sovereign currencies. They are currencies that power the blockchain because it's a decentralized network. And in order to use the services of the blockchain, you need to buy that currency. So that's sort of like the core of why any of these coins exist, and why people purchase them. It's because if you want to use the service, you got to use the coin, you got to buy the coin to transact in that currency, to do things such as DeFi or any other things you want to do, even stablecoin transfers. So when we look at it from an investment strategy perspective, we can monitor this stuff like blockchains don't lie. blockchains get updated practically every 10 seconds or every 10 minutes. In the case of Bitcoin, they don't lie, it's all transparent. We can very easily track in real time whether or not a blockchain is being used in terms of the daily active users, the number of transactions being done, the amount of gas that is being spent, gas being the currency in several different blockchains. And we can devise an investment strategy looking at all of these on-chain metrics in real time and getting a pulse of the network of the entire thing. So we have some real-time feeds, we monitor that, and we can then backtest it and determine, it looks like this economy is growing, so to speak, because you're seeing the flow of money and the flow of stable coins and the flow of transactions happening on-chain. And so we would then obviously have a view and a thesis for the year, and then we adjust it month on month, quarter on quarter, depending on what we're seeing in the market. And then we backtest it with obviously what is actually happening on-chain. So very easy to see, daily active users on Solana was spiking last year, has come down now. A lot of that is flowing to a new blockchain called Sonic. Things like that, we could track that and then make our investment decisions as such.
This was alluded to before on the panel, and it's about looking beyond just Bitcoin and Ethereum. There are many other different layers of the technology out there. There's different types of tokens for different use cases. So my next question to the panelists is, beyond Bitcoin and Ethereum, what other crypto assets or blockchain applications are gaining traction and showing promise for long-term growth? For example, have you considered DeFi or decentralized finance, NFTs, Web3 or Layer 2 solutions? What excites you?
I can start. I think DeFi has the most compelling use case. It was in 2017-18, and it's probably the most compelling use case right now. I worked in traditional banks and consulting and stuff for a decade, and it is absolutely ridiculous and ludicrous on the amount of IT and security and resiliency and middle back office accounting audit tasks that goes into it. It's like 80% of all the friction that happens in the organization in large banks at the moment. This can all just be very simply replaced with atomic transactions and swaps on the blockchain. Stablecoin transfers, think about it. Today, if I've got a CBA share, if I've got 10 and I want to give 10 to you, on your birthday, I sort of can't. It's sort of practically impossible for me to do that. Where we are heading right now with DeFi and tokenization is I should be able to transfer it to you like a WhatsApp message. In 5 or 10 years, hopefully we're in a world where, I want to transfer 10 stocks to you. Here's like a WhatsApp message. I just send it to you and it's in your account. And it happens in 5 seconds. That should be possible, but it's not today because of this really heavy friction-filled financial system built on COBOL databases from the 1980s. So I think the future is where we're heading into stable coins and atomic swaps and transactions and stuff. And once you do that, you should be able to then use DeFi to its full extent and be capital efficient. So if you've got allocation in, for example, the Apollo Fund, say you've got $1 million with us, right now that money is just deployed and it's locked until you redeem. We are heading towards a future where you can give us $1 million and there will be lenders on chain in DeFi, and you should be able to redraw $500,000 by pledging it as collateral, and that should happen within a minute, like WhatsApp messages, within a minute or 5 minutes. So that's the future, and I think that's being built in the next 5-10 years, and very optimistic about that.
I'm excited. Are there any other additional risks and challenges still facing the crypto industry, and how can investors and companies mitigate these? And maybe just focus on one big one that you think that people in this room should know about.
I'll echo what Ed said. Right now in crypto, it's still pretty easy to get hacked and rugged, as they say in crypto. So you would accidentally sign a transaction, and the transaction has malicious code behind it, and then before you know, all your money's gone. And because crypto is irreversible, once the money's gone, it's gone. There's no customer support or banking hotline that you can call to freeze the assets or recover it. That's the nature of crypto as a decentralized currency. I mean, it was built because it has to be outside the system. I think regulations are coming in to put in place things with real-time risk and fraud monitoring. Insurance is sort of coming in, so those things are being built. They aren't there today. But that's still the biggest risk. So there's an education aspect to it as well as usability. So the Face ID thing that I was talking about, a lot of the crypto people were anti it originally, but I think we're finding a balance between mild amounts of KYC with Face ID and freedom of transfer of assets and so on. So it's still the biggest risk, I think, is education and not getting hacked at the moment. So there's some work to be done over there.
The last rapid fire question to our panelists. Looking ahead, what, in your opinion, is the single most significant development or trend that will shape the future of the crypto industry?
At the moment, I think it's the proliferation of stablecoins. Right now, still moving money is a pain. I think stablecoin is step one. Just like I mentioned, I should be able to transfer Apple stocks to you like a WhatsApp message. Stablecoins are level one of that. Once that gets a framework around it, then we'll move on to the next level, which is stocks. And then eventually private credit, other things will come on chain as well. So I think that's happening and a very exciting thing.